Hi, I'm Brock.
I'm Jim.
Before we get started, if you want to stay ahead of the cattle markets, sign up for our free daily briefing at herdadvisor.com. It's delivered right to your inbox every morning, 5-minute read. And when you're ready to dial things in, the easiest way to add $300 per head is timing your sales right and choosing the right sale barn. That's what the Cattle Market Guide helps you do for just $75 a year, less than taking your wife out to dinner. Check it out at herdadvisor.com. Welcome back to Cattle Market, guys. It's Friday, November 21st, and you're listening to our Week in Review episode. I'm Brock, your data-minded host, beaming in from Nebraska, where spreadsheets never lie, and sometimes neither do cattle buyers. Today, we've got a packed show with a lot to unpack. We'll start with a snapshot of this week's cattle markets, then take a deeper dive into ongoing price volatility, political interference shaking up the beef industry, and finally, some international trade drama that could ripple into your bottom line. And of course, I've got Jim here with me, broadcasting from West Texas, where the wisdom runs as deep as the pastures are wide. Jim, how are things looking out your way?
Well, the cows still outnumber the pickup trucks, and the pickup trucks are a plentiful bunch. Been a rough week at the sale barn, I'll tell you that.
Yeah, we're definitely seeing that reflected in the numbers. So let's get right into it and talk about what this week actually looked like from a market perspective. Looking at the numbers as of this morning, we've seen continued downward pressure in both cash cattle and futures markets. For average 549 pound steers, the national cash price dipped to $393.05 per hundredweight. Futures aren't offering much relief either. Both the front and next month contracts are sitting at $339.90, down notably from earlier this fall. So now, if you zoom out just slightly and look into projections, the short-term outlook looks a little brighter. We're seeing national price predictions come in at $421.38 for next week and continuing upward to $448.64 by mid-December. That's a gain of over $55 per hundredweight if those forecasts hold. As for the regions, cattle prices in the north fell between $2 to $5 this week, while the south saw a $4 decline across the board. Cash cattle trade that was running in the $225 to $228 range last week dropped to $219.15 on the December futures. And with volatility impacting both sides of the trade, feeders and producers alike are being forced into some tough decisions. When both the north and south take a tumble in the same week like this, you know confidence is shaken. What's your read on it, Jim?
Them sale barns have been quieter than a steer in a snowstorm. When everybody's hurting at once, the bulls ain't in the barn no more.
That's the truth, and that brings us to what I really want to dig into today, this price volatility we keep seeing, because it's not just the cash trade pulling us down. Futures took a hit too. The December live cattle contract fell to $290.15 per hundredweight. That's substantially below that $225-$228 price range we saw just a couple weeks ago. And what's leading this softening? Well, weaker cash trade is certainly a major player. Demand is still decent, but the weight of uncertainty is beginning to drag prices down. You've got buyers hesitant to commit, while feed costs remain relatively elevated. Plus, volatility tends to feed on itself. When the board starts sliding, confidence goes with it. Now keep in mind, these kinds of drops are shaking producer confidence heading into the holiday slowdown. Folks who were banking on a stronger late November market are suddenly reevaluating their marketing windows. We've seen Scottish Highlanders show more consistency than this futures board lately. You've seen some wild swings before, Jim. How does this stack up in the long view?
Well, now, back in October of '87, right after Black Monday hit the stock market, we were marketing a load of heavy steers. And let me tell you, the price swings made my head spin. One morning, the board was down the limit. Next day, it was half recovered, then right back in the dirt by the weekend. I had 3 different buyers give me 3 wildly different bids within 24 hours. Finally sold the load to old Bill Henderson. He gave me his word Monday and stuck to it even though prices had dropped almost $8 by Thursday. You don't forget fellas like that.
Wow, that's exactly the kind of stability that algorithms can't offer. And your story underlines a good point. Volatility is nothing new, but it always feels heavier when it's your cattle on the line. The lesson here is this. In turbulent markets, fundamentals still matter. Weight, grade, reputation of your herd, those things can bring predictability when the numbers don't. Short term, we'll likely continue to see these erratic price moves. But if those forecasts are accurate, I'm talking about the national average climbing over $55 per hundredweight by mid-December, then holding off could benefit those with the flexibility to wait. Of course, the key word there is flexibility. Not everyone's feed budget or pasture conditions can afford to gamble 2 or 3 extra weeks. That's the real tension right now. Do you hold out for better prices and risk burning through your operating budget, or do you lock in lower prices now and kick yourself if the market recovers in 2 weeks? There's no clean answer to that question.
And that's the rub, right? Volatility's fine on paper, but hey, don't buy itself.
Exactly. Now let's shift gears to Washington, because politics are once again reaching a hand into the cattle market. According to new reporting from Cattle Range and Beef Magazine this week, we've got multiple fronts of government involvement threatening to influence the pipeline, from ranch gate to retail shelf. First, there's renewed focus from the federal level on food price inflation. The White House is reportedly pushing harder on both the Federal Reserve and the Department of Justice to look into food chain bottlenecks, beef included. And that brings us to the next point: growing scrutiny of the meatpacking sector. Former President Trump is once again calling for investigations into the big packers, alleging monopolistic behavior and possible price fixing. That comes after years of producer complaints that margins aren't getting fairly shared. What does all this mean down at ranch level? Well, more questions than answers. While investigations might put pressure on the packers, they rarely result in short-term price shifts for producers. What it does do is keep uncertainty in the air. Processors may back off from aggressive bids with the DOJ sniffing around. We've seen it before. Political pressure leads to defensive behavior from the majors, and that filters down through the bidding process. Now add in the role of interest rates. With inflation concerns still looming, the Federal Reserve's decisions around rate hikes could increase the cost of operating lines and financing expansion. That directly eats into profit margins, especially for younger producers or those in build-up phase. So here's the take home. Be aware of the headlines, but don't let Washington make your marketing decisions for you. Policy winds blow in every direction and usually come slower than expected. Does that match what you're seeing on your end, Jim?
Well, if I had a nickel every time they said the government was going to fix the food system, I could buy back my '72 Ford from the scrapyard. Ain't nothing slower than a politician trying to learn cattle math.
That's probably the best one-liner summary of government intervention I've ever heard. And that's the frustration, isn't it? The speed of political action doesn't match the speed of the markets. While producers are trying to read the daily sale results and make decisions in real time, government investigations can drag out for months or years with no clear resolution. Focus on the numbers in front of you, tighten your cost controls, and keep a sharp pencil on your break even. That's what you can control. All right, let's cross the pond now and take a look at trade. The latest reports are pointing to renewed turmoil in global cattle markets thanks to international trade tensions, specifically the EU-Mercosur agreement. France just formally rejected the current terms of that trade deal. Their argument: they want stronger agricultural clauses, essentially more protection for EU farmers from cheap imports coming from South America. In plain English, that could mean less beef flowing into the EU from countries like Brazil and Argentina. From a U.S. standpoint, this reshuffling could actually be a positive, at least temporarily. If EU markets restrict South American beef, U.S. export demand might pick up slightly. That said, those deals typically take months or even years to renegotiate. A second international wrinkle comes from planned farm payment changes here at home. The USDA is reportedly working on new aid packages to help farmers hurting from slumping crop prices. That might seem unrelated at first glance, but remember, subsidized grain changes the entire feed market, which then affects feeder margins and ultimately cattle marketing decisions. It's all interconnected. I know international policy isn't everyone's favorite topic, but it matters. You got any old war stories about trade chaos, Jim?
Yeah, most cowboys stop listening when you say Mercosur, but let me tell you, back in 1988, we learned real quick how foreign drama could hit close to home. That summer, we were knee-deep in a drought. Pastures were fried like Sunday bacon, and nobody had enough hay. Then all of a sudden, Japan starts flapping about halting U.S. beef imports over a trade disagreement. I remember sitting at the sale barn with my neighbor Tommy, watching folks sell off good bloodline cows for half what they were worth because they couldn't keep them fed. That was the year I learned to always stash at least a rain year's worth of feed.
Hold on, that's a powerful reminder right there. And you're absolutely right. International politics might feel a world away, but they can swing bids at a local auction faster than you'd think. In fact, one of the things to watch now is how global trade flows redirect if more countries start pulling back from deals. A restriction in beef flow from Mercosur into the EU opens a vacuum, and someone's going to fill it. If that ends up being the U.S., we might see recovery in export demand just when we need it. But if new tariffs or political hangups slow us down too, we may not get to enjoy that upside. So what can producers do about trade headwinds? Not a whole lot, except build enough flexibility into your operation so that international curveballs don't knock you completely off course. Make sure you're scanning those export numbers. Talk with your buyer about where your cattle are going, and don't assume demand will always come from next door. The global market is messy, unpredictable, and increasingly relevant to what happens at your local sale barn.
One thing's for sure, trying to predict global politics is like branding calves with oven mitts. You're not going to get a clean result, and you're liable to get burnt.
I'm going to steal that one. All right, let's wrap this up. Here's your quick headline summary for the week. Prices for 549 pound steers are down to $393.05 per hundredweight, with futures stuck at $339.90. The North saw a $5 decline in cash cattle, and the South dropped by $4. Volatility is back in a big way, both in futures markets and live trade. Political pressure on packers and inflation concerns are adding uncertainty, and internationally, the fallout from EU Mercosur tensions and pending farm payments could ripple through price points heading into the first quarter of next year. Bottom line, this market, that may be wild, but it's not lawless. Know your break even, trust your relationships, and keep your costs tight. You'll outlast most of the noise if you stick to those fundamentals. Any final words, Jim?
Just remember, folks, even a flat tire keeps rolling if you stay on dirt roads.
That's perfect. Thanks for joining us for this Week in Review. We'll be back next week with more numbers, stories, and insights to help you stay one step ahead. Until then, keep your head down, your gate locked, and your cattle fed. We'll see you next time on Cattle Market Guys.
Take care now.
That's all for today. Remember to sign up for our free daily briefing at herdadvisor.com, and the easiest way to add $300 per head, timing your sales and choosing the right sale barn is at herdadvisor.com with the Cattle Market Guide.
Catch you in a couple days.
Okay, see you then.